I don't know about you, but I want to know what the heck is going on in Austin, Texas. After looking around and trying to find someone who could talk about the market, I stumbled across this wonderful individual, Danielle Fountain, who's putting out daily stats on X or Twitter. And then she graciously said that she would come and talk Austin real estate with us. Danielle, thank you for being here.
Awesome. Well, thank you so much for having me, Michael. I'm very happy you found me. And I'm actually the putting out daily stats, I've always done it in my head. And it was this year I realized, especially when I was seeing so much negative information about Austin and about projections and different things like that over last year, that I started hopping on and actually responding to people. And I realized, hey, there's a lot of value in transparency. And so most people can't find this data because it's in our hidden real estate systems here. So I figured it's time to start sharing it.
No, I think it's wonderful done, and I love the fact that it's daily. But let's who is Danielle? Let's tell the audience who Danielle is first.
Yeah, so Daniel, my name is Danielle Fountain, obviously. I'm actually the founder of the One Realty here in Austin, Texas. I'm a partner with a bigger brokerage called Side Inc. If you're in California, you probably have heard of them if you're in the real estate world. But what I grew up in a family out in Texas. I actually went to the United States Air Force Academy for college. So that's kind of my love for analytics. So we're taking aeronautical, astro, all those engineering courses.
Wow.
And I learned numbers are very hard to lie. Like you can't, you sometimes can finagle how they look, but at the end of the
Mm,
day, the numbers tell you the truth. Went on to serve in the Air Force for 10 years. I was an officer in the US Air Force for 10 years. I did negotiations with labor unions. So I have a lot of dealing with people and then with numbers. And I got out, I moved to Austin. I had an interesting real estate experience, and I actually bought my first home, and I didn't buy, I'd rented the entire time while I was in the military. Someone had put on me do not buy. And so, like you've said in one of your podcasts, if someone's asking, should I buy a house? If you're asking, you shouldn't buy a house. And so I
yeah.
got to the point where I said, I'm going to buy a house. And so I went and bought a house, realized how much I loved numbers and data, and then also working with people. So jumped full headed onto the real estate world. Been fairly successful out here, especially I think the use of numbers and negotiations has been
Mm,
really helpful. And then launched my career out here in Austin. So it's me and my wife, in our little brokerage out here at the One Realty.
very cool. Well, I'm just curious, what year did you plunk down and buy your first your home?
2017.
Oh, not a bad year. You're doing okay.
No, no, not a bad year. And funny enough is when I was looking to buy versus just being and I was an amateur buyer, but I still started looking for like trends as far as development and what was happening with the HEB, which is our big grocery chain out here.
Mhm.
So it wasn't just about finding a house. I knew that like, hey, this is more than buying a pretty yard and a pretty
Mhm.
kitchen. And so I was already analyzing it when I first got into it.
So what I think you're telling me is you were looking at kind of city trends and where the development was going, and you were buying a nice home, yes, but you were buying in the path of development. I think that's what you're telling me.
Correct, correct. Actually, I bought over, if you know anything about Austin, East Austin has kind of become like an it area. I say up and coming area. A lot of it was an opportunity zone. So back
Oh,
in
okay.
2018,
I remember.
2017, 2018, when developers started shifting over to this part of Austin, part of it was because the land development was cheaper. There's not
Mhm.
land to buy. You had to tear down houses and rebuild houses. So as certain parts of Austin, like '04, which is Travis Heights, it's out by South Congress area, as it got so expensive, developers were looking for other areas. So they started coming over
Mhm.
to East Austin, which is the proximity to the city. So to downtown, the capital is 2 miles. But then
Mm.
we were also seeing a lot of commercial development. So commercial development in regards to the restaurants, and we were seeing apartments come in. We were seeing a lot of support. They redid the HEB out here. So things like that, the precursors to
Mhm.
finding, I say, the hot area. And that's kind of why we targeted where we did.
Very, very cool. Well, before we talk about Austin today, I think I'd be remiss if we didn't talk about Austin 2020 to maybe 2022. All the numbers basically said Texas was open, everybody was coming. It felt like, for every 50 people that were coming, there were like 10 homes available.
Yes.
It was really wild to watch. What was 2020 to 2022 like?
So obviously 2020, the beginning, it was just absolutely, it was kind of dead. No one
Sure.
was doing anything. We get towards the end of 2020 when people are, and I think Texas was one of those states that we opened up first, or we didn't fully
Yep.
close. And so I had a lot of clients coming in from California, they were flying in, and it was like the word started spreading. And I remember the
Mm.
day, um, it was in December, and it was between Christmas and New Year's in December when
Oh,
someone
wow.
in December of 2020 when someone posted, I just closed a house, or I had a house out there and I got 63 offers. And all of a sudden, our agent forums start blowing up. And this is December before we even hit January of 21. So we were
Wow.
seeing people come in at the end of 2020. But as far as like the overbidding, over asking, we had a lot of inventory that was just stagnant. So it had
Mm.
built up. We weren't seeing a lot of people putting their houses on the market, but they were there. Well,
Okay.
once that started, it was almost like the avalanche, like the snowball effect. Um,
Mm.
come the beginning of January, and it was just a straight out escalation of prices.
Yeah.
Luckily, I partnered with a lender that was able to turn a lot of my clients' offers into full cash offers, and that's a whole different discussion. So I think that's part of the reason that I was able to grow my business so fast, but was that agents, it was in our agent forums, people were posting daily how many offers you're getting, because in Texas, unlike California, we don't write how many offers that we have on a house. So when the house is
Mm.
active and we have multiple offers, the only way you find out is if an agent puts it in the notes. And so we were having this rapid escalation of prices because the agents online were also creating this theory, pushing it out to their people.
Hmm.
And then we had a lot of it goes back to the investors. So we had a lot of investors from California that wanted to get away from California. Well, they had cash. And in Texas, our prices were so much lower at the time that the escalation of these offers, I'm talking, you had houses that were listed for 400, they were going for 100K over. It was
Oh,
not, I think the average over asking for a house at one point, and I was tracking that, not sharing it, was like an 18% was like the average. So we were seeing houses go, I mean, there was houses that went for 56% over list price because there was nothing. Cedar Park, which is up north. I remember one day looking in the entire city, there was 10 houses available, and that included any condos.
oh, wow.
So
Wow.
it was pretty rampant. And we also had Open Door was because of Austin.
Yep.
The other thing that hurt us was we had Open Door, we had a bunch of
iBuyers.
yep, we
Yeah.
had all of these big buyers that were buying out, and that was probably part of their demise, was that
Yes, that was part of their demise. Yes.
they shot themselves in the foot. I mean, it was like, hey, we've got money, we're going to pay it because Austin's always going to continue to go up. And I think on average over the course of the year, over 2020 to May of 2022, Austin appreciated about 65%. So that was
Ugh.
it, but that's where I say what we
Yeah.
saw in 2022 and 2023, which I'm sure you're going to hop into it.
Yep.
It was a correction. It was
Yeah. You had to give some of that back. That's not normal.
Yeah, yeah, it was 65%. And that's when I averaged the prices out to see like what did we
Yeah.
do going in. If we looked at I think I looked at May of 2019 and I compared it
Mhm.
to where we got to of May of 2022. And it was like a 65% increase was the average for Austin.
Yeah. Well, let's get to 2023 now. Kind of transition. Rates spiked. Open
Yep.
doors, no longer a buyer. They're a net seller for sure. Inventory spikes. Prices start taking haircuts. What was 2023 like?
So it's really, I remember when it started, it literally started right when the kids got out of school. So
Mm.
our schools typically end in May. And so that's when our buying season slows down, but that's where our inventory goes up because everyone's listing
Ah,
now when the kids get out of school.
got
We
it.
typically hit our peak inventory historically in like the July timeframe, July, August.
Mm.
Well, our inventory starts going up, rates have now gone up. So buyers are slowing down. But what happened is and this also goes back to becoming an agent. There were so many new agents that also came in that had never seen anything but prices. If your house didn't sell in the first
Oh,
week, so there's a
yeah.
lot more to just rates. You had agents that came in over 2 years, saw the easy money, had never gone through anything. And I was one of the I say newer agents. I got my license in 2018. So I bought my house and had my license within a few months. That's how I say rapid it went. But essentially, you had these new agents that had never seen a price cut and or seen their house sit longer than a week. So they're
Right.
advising sellers, drop your price, drop your price, drop your price.
Uh,
In the background, I had listings and I was calling within a radius of like anywhere from a half a mile to a mile. Every single agent that had a house that was for sale, I was saying, did you have any showings? Did you have any open houses? Who came through? Because I want to see, is it just our listing? Is it a price thing? Or
right.
is it a bigger, is there a bigger
Right.
picture? And that was the problem is that I remember buyers gone by August. And so August
Mm,
of 2022, before the big prices, I was noticing, okay, buyers are gone.
mm,
Agents are de-escalating the prices because they're telling them your house is overpriced, otherwise it would sell. Not realizing at the same time what was happening is buyers had left the market. And then
right.
combine that with the hysteria of the media, so like the Crash Bros, all those that
Yeah.
we
Yeah.
talk about.
Yeah. Austin was right at the top of the list.
Oh,
Right.
we
Austin's
were
crashing.
it's crashing and it's bad and look at them and the house is on. And so we're historically across the US, we sat at about 30-40% of houses were taking price reductions. We were at like 65%.
Mm,
Well, you have the economy kind of in limbo. You have you listen to the news media and they're saying Austin's crashing. So of course, if you're buying,
mm,
you're all of a sudden pulling back and saying, okay, I'm going to see
yep.
what happens in Austin. And
Right.
so it was the combination of the new agents and not never seeing anything dropping prices, then you're hearing what's happening in the economy, you're having the interest rates go up. And so in all of 2022, which is it was still half of the year was a good year. The other half
Right.
wasn't. Historically, we were selling around a little between like 11.5 thousand houses a year is what we
Mhm.
had for the past 10 years in Austin. And that's even including the pandemic, but if we go all the way back to 2013. In 2022, we sold just over 9,300. Now I'm talking about,
Oh,
first off, I'm talking about Austin proper, like the city of
right.
Austin.
Hmm.
That's where I focus on. If
Sure.
you go and look at Austin MSA, there is so much more data out there. And I think that's where some of the hysteria comes in. When people see Austin, they see this bigger data. But you
Right.
have to realize is that Austin is so small and not so small when it comes to the land that our real estate is going to be a little bit different because we don't have big acreage of land to be developed.
Yeah. It's not
Whereas if
Dallas or Plano or something.
yeah, so I actually grew up in Dallas and Plano. So I know that whole area very well. But like if you go up north to Round Rock, Georgetown, or you go
Mm,
south to Buda and Kyle, and those are all part of our MSA. And so that's where kind of some of this hysteria goes on. So we didn't
got it.
sell, we sold significantly less. So the 11.5, we're now selling at like a 9.3.
Right.
Going to 2023, we only sold 8.2 thousand houses.
Oh, wow.
Yes,
Transactions way down.
way down. So when you saw what people saw online, they saw, oh, Austin's inventory is soaring. Well, that's the MSA. But what
Right.
was also happening was, yes, our inventory was higher, but not our new listings. And that's the key,
Ah, it was
is that
aged inventory.
it was exactly. And so most people focus on, well, Austin's got all this great inventory. Great, we have inventory. But if you actually look at it, our inventory might have been down about 30% as far as if you compare new listings each
Right.
month of what we should have had. And this goes back to what Logan was saying. It was we have a lot of people that number one aren't buying because the move up or move down is more expensive because of interest
Yeah.
rate.
Yeah.
You have I call them the unintentional investors, the people that bought a house that
Yep.
they have to move, but they can cash flow their house out. So why are they going to sell it right
Yeah.
now?
It's an
And
asset.
that's
Yeah.
it's an asset. The next thing that we also had is there are some people right now that I, I've told so many of my buyers, and maybe agents are going to kick me for this because I'm hurting the inventory, but I'm telling them don't sell them. It's like, look at your property right now, look at
Yeah.
what you can cash flow it for, and then just wait out. It's like the stock market. The people that end up
Mhm.
doing better are rather than short sells are those
Mhm.
that hold on a little bit longer and you wait and see. Why would you
Yeah.
sell right now? Let's hold on and wait. So combination right now is that yes, you see inventory in Austin. This is people like to say like months of supply, and
Mhm.
your months of supply is based on what is your absorption rate from your buyers.
Yep. Mhm.
Well, we looked a little higher last year, but if you took previous year's absorption rates and you put it in, it would have been lower.
Mm.
And that's something that as I'm watching and as we start talking, I'm guessing we're gonna talk about what's going on now. You can
Yeah,
tell me what you're hearing, and then I can talk about that. But I think that is gonna be it's gonna be a wake-up call. Now, how fast this wake-up call comes, I think it's gonna depend on a lot of other I say economic factors that are gonna go in
sure.
from there.
Yeah, so when I look at Austin 2024, um, a complete outsider, right? Complete outsider. It
Mhm.
feels to me like Austin is setting up to finally be a normal year, right? 2020 to 2022, kind of middle of the year, stupid appreciation, stupid behavior, not healthy, crazy.
Yep.
Second half of 2022 through 2023, the give back, the level setting, we are where we are. Now we're in the 2024,
Mhm.
complete outsider, maybe actually be a normal year being like 2019. How does that feel as
Yeah, it
somebody in the
feels
data?
it, kind of a couple things real quick. So, when we talked about we grew up 25% till May 2022. From then to about the middle of 23, we dropped about 20%. So people still have about 45% equity, give or take on the average. But we didn't fall much past that. So the end of the year, there was some zip code that might have ended up, I think on average for Austin last year, our appreciation compared to the previous year, we actually ended up about 2% higher. We ended up a little bit higher. So
Hmm,
then all the predictions, like everyone's predicting it, the end of the year kind of saved Austin a little bit because we started to see some activity.
okay,
I do think we've already started to see, so what I'm tracking every day is that we're slowly chipping away at those old inventories that's sitting there. Our days on market, which is back in December timeframe, we were sitting anywhere from 70 to 94, and that'd be normal in a zip code in an area.
sure,
We're seeing them I like to look at medians and averages because you
sure,
have large ones that are skewed in medians. So our median, we're sitting at like a 28 day for sales, and and this is the houses that just closed out this past week,
sure.
and we're seeing our average in the low 50s. So it's chipped down a lot in two months.
Yeah,
So if we continue our sales and our listing to at like today's rate right now, then I could see it kind of being more of a normal year.
right.
If
Okay.
interest rates go down, and so this is what Logan,
Ugh,
then this is where it goes back to where Logan hits. He doesn't like to talk about pent up demand, but
right.
I think that you have to look at it is
There's marginal demand
so
just sitting there.
the last 2 years historically, we were over 5,000 houses shy. If we add up what didn't sell in 2022 and 2023, that's 5,000. That's a little over 40% in comparison to what we've done in the
Sure.
past. And that would be neglecting the fact that we have grown our population.
Yeah,
Our
that's
population.
a big miss. I think people don't realize just how much Austin grew in 4 or 5 years.
Yeah, so we grew, it was about 33% over 10 years is what the
Think about that.
population grew.
33% in 10 years. That's again not normal.
Yeah, that's where it goes back to is like when I say normal year, if it keeps this way and if people are still timid and there's not a drop in rates, then yeah, you're going to see those people that can buy are going to buy. The problem too is that the price point in Austin's a little bit more expensive than it used to be. So
Sure.
you're going to see more renters. Um, I know this isn't really going down that lane, but I do like to look at like development
Hmm.
that's happening. And so we're having a ton of I think our apartment buildings are going to go up by like 60%. I was talking to a
Wow.
commercial developer. So
That's a lot.
60% of our increase in inventory, like overnight from all things that was being developed in 21 and 22, from when everyone got excited. Now,
Hmm.
my one fear, and this goes back to what we talk about houses, not people not selling, unintentional investors. The other thing that we're leaving out with Austin is that, so we talk about new construction in Austin. Once again, it's people tearing down houses, building new ones. They did pass here in the city council as far as zoning that we can now get 3 houses on one lot. There's different things that they're trying to do to build it up, which is actually going to drive up prices because those areas close to Austin, the land's going to be more valuable.
Yeah, of course.
So, and we don't have HOAs in a lot of these neighborhoods, they're going to tear it down and build up. But we're not going to see that for another year and a half. because they're not been bought. They have to go all
Yep.
through all of the development, city council approval permits. We haven't seen it. And people were not buying houses from the developer standpoint, because I had people that were selling houses that would be lots normally. They
Sure.
weren't buying them at all last year. So
Hmm.
developers just paused. Not like
Yep.
your big box builders, they have that money. So they can deal with the pause. They have title companies, they've got lenders. They can give those rates of sub 6% to get the buyers back. These, I say one off, one, two, they're
Yeah.
professional builders. They weren't building last
No,
year.
they stopped. They
They
absolutely stopped.
so
Yeah.
that's when people say, oh, it's going to be a normal year like 2019. Well, our new build inventory
Hmm.
it's almost like we turn that pipeline down to a drip. So
Yeah.
that could also be, I say, more on the scary side too, because we don't have the new inventory that we should have had that coming
Yeah.
throughout the year. So if rates go down, it's going to be, and all these
Yeah.
people that bought it. So you're also having people move up and move out of their apartment buildings. They've been
Hmm.
in for 2 years. The people that couldn't buy during the pandemic, because all of our outside cash investors came in, those people, they've been now seeing an apartment for 4 years. So it's going to be, I think it's going to be a little bit busier than probably most would
Okay.
expect, because people have been looking at Austin for the past year and a half. It's kind of like it's overinflated. There's not much, but with everything from we just had, as far as the Samsung coming out here, we have a lot of big companies that are still announcing, like
Yeah.
even having Elon Musk, I say, real close by. All of these people are still coming here, and there's announcements. I mean, probably
Yeah.
once a month there's a big announcement of a company moving here.
Yeah. When I think of Austin, I go back to a conversation I had yesterday with Beth from Seattle, King County, and in a conversation I had with an agent in Silicon Valley.
Hmm.
And the reason I bring that up is there's a lot of tech companies in Seattle and the Bay Area, and I'm going to guess Austin. Why is that important? There's a lot of stock wealth, right? A
Hmm.
lot of these people have what's called RSUs, restricted stock options or stock units, and they're feeling pretty good. I mean, Beth was telling me yesterday about a house that went for 400K
Hmm.
over. I
Yep.
mean, geez. So
We've
I'm
already had a house.
wondering,
We had a
yeah,
house
go ahead.
this year. I already saw. It was like a 400. It was 450, and it was priced right. It went 100K over at that price point, and so that's a
Wow.
significantly lower. I pulled this data yesterday, and it was like 14% of the houses that closed out in the past 7 days were over asking.
Say
And
that again. 14. So that's 1 in 8, roughly. One in
oh,
eight homes went over asking in
and
Austin, the
in
crash of
Austin,
all worlds.
and this was this past week. So these are houses that
Yeah.
went under contract in January, not even in February, or maybe in part of February, but 14%. And the average is at a 4.3%. I think it was. It was right. It was between 3 and 4%,
Mm,
depending on if you're looking at average or median. So this goes back to in 2022 and 2023, you had houses closing out on average. The average in some zip codes were closing out in the 80s percentile. So like 88, 89 percentile of the list price, not even
right.
original list price. It was
Oh,
significantly lower.
wow.
That's of the current list price. The
Right.
original list price, you had them even lower than that. Today, we're back up to like 98 and 97%. So that's showing that prices they're kind of listed where they are. So they're priced well. And now we're going to start seeing the escalation of prices slowly going up
Yeah, I think
because
so.
buyers are getting closer.
When did the iBuyers really leave Austin? When did you see that?
They stuck in there probably until towards mid of 2022. I'd say we really saw them start disappearing in no, I'd say August to November is when they started to just trickle out. And I think it
Yeah.
had to do because they were buying properties, but they weren't able to sell their other
Oh,
ones.
yeah.
And
Yeah.
that's right in the time frame where it had slowed down. There was people that they were willing to buy from, and they didn't have to go significantly over. But then all of a sudden, now their inventory was coming up.
They couldn't sell. I think Austin, I think Austin and Phoenix really are kind of same story, just different timeline. I think Phoenix or Scottsdale, they went through it first, right? I think Scottsdale did have more iBuyers focused on it, or
Mm-hmm.
Phoenix. So when they pulled out, their inventory skyrocketed for a couple of quarters and then slowly worked its way down. I think Austin went through a similar thing. And again, it just feels to me that Austin is going to go back to growth mode. So why don't you share some of the stats you've collected over the last couple of weeks? I know you do this every day. What are you seeing right now today?
So right now, this past week was the first time that we've actually seen where our new listings have outpaced our under contract. So we have been seeing
Ah,
that was
interesting.
the first time was this past week where more houses came on the market, new listings than under contract.
Yep.
Now, what I'll say is though, is that that looks good if you look at the superficial data. But what you're also not considering is I also go back and look at what was withdrawn from the market, what was held from the went on hold, what was expired, and then I also add in what was back on the market to the new listings. And so
Sure.
we were at a net. So let's say it was like 286 homes came on the market. At the end of the day, we were still a net negative 41. So that was still, so that's where I'm
Wow.
going is our inventory is not getting replaced. We're having more buyers, but this is also where it goes back to that pent up demand is because we had more listings come on the market in February than we did last year. I think February we were in the thousands. In 2023 we're at like 773. So it's a significant jump. It
Yep.
looks our numbers align with those numbers of 2019, so pre-pandemic, but we all of a sudden have this demand that's there. And we have demand that is outpacing already. Our demand is already outpacing what is coming to market. So that's one of those big, I say the big things that are in the sky is like, this is the calm before the storm of people coming in. So we're still at negative coming in. And then the houses that are actually coming on the market, what we're not taking into consideration is a lot of those they aren't really new listings. They were withdrawn, they were
Yeah.
expired. And so it's like their second look that we're seeing here. So big thing too is that as far as price point, this is where it goes back to knowing your market. One of the big things is I always say, especially if you're looking at it, you're really going to start having to drill down in different areas and what's happening with the demand. Our average price point in Austin is in like the 800, or sorry, average price point in Austin is like a 1.3 million. Sorry.
Oh,
Uh, yeah,
wow.
1.3 million is our average price. Our median, it's right in the 700s,
Oh, okay.
is
Yeah.
where we are. But those houses that are selling, so if we look at our sold data instead, our average sold house is in the 800s. And so what it is that those lower inventory houses, those are the ones that are moving quickly
Yeah.
right now. Probably most likely because those were the people that are in like the apartment buildings that they were renting because they couldn't buy. So we're seeing those houses are turning significantly quicker. So if someone's looking to buy and you're looking to buy, sub 700, 800, you need to be prepared
Yeah.
for, you could be facing multiple offers. That stuff is going to, I say, happen quicker.
Yeah.
As we go into our luxury market. Now, our luxury market, they do have more time, but that's where it goes
Yep.
back to I say the stock options for our silicone, we actually call it Silicon Hills out here in Austin.
Ah,
So
okay.
we call
Silicon
there's an
Hill.
area we call Silicon Hills.
Huh.
And it's kind of, instead of our valley, it's our
I didn't
hill.
I didn't know I didn't know Austin had hills, but that's okay. I thought it was
Yeah, we
flat.
do. We actually,
Oh, wow.
if you go west of Austin, because you start getting out to west, and there's some really, really pretty,
Okay.
I say hilly area hills, that overlook our lake too in Austin, the
Ah,
Narrator
yeah.
Lake.
You're right. I remember that. Yeah, I remember
Mhm.
that. Okay.
Yeah, and then
All
you
right.
go out to Dripping Springs and Fredericksburg and all of this stuff. And I think that's the other thing that drives Austin is that between us and San Antonio, you can get to San Antonio in an hour and 15. And
Mm,
so if for an investor, if you're looking for this sort of investment, I would say honestly, if you start hitting San Marcos, which is about 30 minutes south of Austin, and New Braunfels, those areas are set to they're more affordable. So
mm,
people are moving down south to kind of those areas, and they have feelings of like reminiscent of old Austin
yeah.
that we're starting to see. So
Very cool. Well, I'm curious. I think you said the median in Austin's 800. I think that's what you said.
yeah, it's right around 800.
All right, let's just call it 800. The thing that I really want to know, and this just bugs me, is I want to know how many active listings below 800 and how many above. I don't, and then if you take the absorption,
Hmm.
I think what gets lost in the numbers is I believe that luxury is stacking up
Hmm.
And below the median is just like, it's almost a unicorn standing next to a rainbow. It's
It,
like,
it
it's crazy.
you are spot on. So that is where, because that's where if you were to look, if we took luxury out of it, so let's call, because the average right now we're at the 1.3 million is the average, but like let's say we pull out above a million, our inventory is way down when we go to these smaller houses, and so
Exactly.
that's it is the luxury has stacked up because the people that are going to buy luxury a lot of times they can buy it.
Yeah.
So it's it's not, it's one of those things that, hey, we can buy it if we want to, we can get that loan. We're not as worried about what are happening with interest rates. If we're going to
Yeah.
move, we're going to move. But that's also why the luxury will sell. The luxury is not going to stay and necessarily be a landlord. They don't want to be a landlord.
No, you're
It's
not getting
not,
rid of those.
they're going to take that, they're going to take their net 35% equity, let's say, once they paid everything off. They're going to take that net equity of 30 or 35% that they made in the last couple of years. They're going to leave it. But what's
Yeah.
going to happen is those smaller homes in that 500-600 price range, those are the ones.
Yeah, they have optionality. They have choices.
Mhm. Luxury has
Yeah.
choices. When you start getting into the lower, it's moving quickly. Because let's
Yeah.
say I think our inventory today was at like 1952, so 1,952, and then our pendings is in the 900 as well. So you're
Mm.
just seeing like if our absorption rate,
Yeah.
just even looking at that.
So Danielle, I'm going to ask for a favor. You just gave
Yes.
me two great numbers, 1952 total active inventory, nine something pending.
Yep.
I would love to see a tweet later today below 800. How many active listings
Done.
are below 800 and how many pendings? And I bet you it'll be shocking.
Yep. I will send you a tweet. I'll tag you in it.
There you
And that
go.
way people can actually see, hey, here's what's going on. And so I like that data point. I'll start throwing that data point out there, especially if you're looking for investors. And that's one
Exactly.
thing is,
Investors, first time home buyers, that's where everybody's focused. If you can go drop $1 million on some Lakeview house, you're in the top 20%, right? We
yep,
don't have to worry about you. Let's
yep.
worry about everybody else.
Yep. And that is one thing when it comes to investors with Austin, it's really hard is that you're not getting that magical number as far as being able to cash flow your property, even with 20-25% down with today's interest rates, because of the appreciation that we saw and because we're seeing the big influx of apartments coming in. So for an investor looking in, you talk about the cash flow investments versus you're looking at your capital gains one, the ones where you're going to make the gains in the properties. Austin, and an Austin investor is someone that's coming here that is, I say, it's better than roulette, but craps or anything. But your investment is because you are going after the appreciation in the value of the property, and that is based. A lot of that's going to be based on what companies are moving here, as far as it is a finite supply of inventory that's here in Austin, and so you're playing the big game. So when it comes to smaller investors, if you're just trying to buy a house, your first investment house, to be honest, Austin's, if you can, unless you can offset that rent, it's probably
No
not an
joy.
investment place. No.
We call that an alligator on this channel. They'll eat you alive. We don't like
Yep.
negative cash flow. But you already talked about cities 30, 45 minutes away. I had to
Mhm.
choose a market 2.5 hours away. So San
Ah,
Antonio, I think you said was 90 minutes. So
yeah,
again,
not even.
there's lots of options if you want to do the work.
Yep.
Danielle, where can people follow you? Because again, you're putting out daily content. Austin gets a bad rap. I think Austin's turning. But where can people follow you?
Yeah, so if you look at, well, if you find me on Twitter, it's at The One Realty is going to be me on Twitter, or you can just look up Danielle Fountain. I always say, go find who Michael follows. He's probably, if you look at his likes, he's probably liked something of mine, but I'll tag it in there. And then also, if you look up Danielle Taylor Fountain, I'm on Instagram, but I've learned as far as the juice is worth the squeeze, it's not there anymore. And I've realized that that's for people that really like I say the pictures and tours, but I'll start probably incorporating into X a little bit more. But I love data and
Mhm.
that's my passion. And so I can show you beautiful houses. We can talk about those all day. But at the end of the day, I want to get to the numbers and I want to
Yeah.
get to, I say, the dorky side of that I love.
The dorky side.
Oh,
I
I
love
am
that.
a
You're a
my
dork,
my
huh? You
my
wear that
wife.
badge?
Oh yes, my wife is. You can see like this is one of the rooms that we're in. She's very decorative and gets we actually she grew up on a cattle ranch in Texas, so we're going to go work cattle this next weekend.
Oh,
We have
jeez.
horses, so completely different than the Austin City girl that you see now. But it's nice because with our clients, you actually get both of us, and
Yeah.
she can tell when the clients are glazing over from my numbers, and she just comes in. She
Just
has a
get
sense of
out of the way.
humor. Oh, she has a sense of humor and very
Uh,
so it's like yin and yang I say
that's
when we
awesome.
work with people, kind of offsets it.
Well, I think there's a lot of people that follow my channel that are interested in Texas, interested in Austin. Again, if they wanted to reach out to you, buy or sell, ask questions about investing, where should we send them? Anywhere else?
And then you can go to the onerealty.com. Our website. So I say, we always ask you, did you find the one? That's us.
Ah, did you find the one? I like it, folks. Again, follow her on X or Twitter. I think her daily content is amazing. She's going to put out some data later today that we asked for. I think you're going to be shocked. I think the active inventory below 800 grand is lower than you think. I think the pendings are higher than you think. But we'll see.
We'll see.
Danielle, you're amazing. Take care.
Thank you so much. Bye.
Bye.